to the Future's Edge Unfiltered Flash. That's Bobby's name, and I think it's cool. You like it, don't you?
It's going to stick like Nards.
It's going to stick like Nards. We're bringing things back.
Like your Nards do in the summertime.
Okay, here's what we're going to talk about today. On Tuesday, we had one of the most anticipated presidential debates in memory. It was like watching a train wreck in slow motion in my mind. The odds of president shifted, though, so clearly people think it's important. On predicted, Kamala Harris went from 53% to 57% in short order when it seemed like she was winning. There's quotation marks for people listening, winning the debate against Trump. When you look at the fact that if this is real and this momentum lasts, her policies are starkly different than Donald Trump's. We are not political, but we are driven by policy, and policy affects the assets that we trade. If we are really starting to price in a Kamala Harris presidency, what assets will be most affected and how?
So I'm waiting for all the comments about how we're Trumpers and we should have our MAGA hats on and all that stuff. I look at Bitcoin as a proxy for this because one of the places where they're clear, a lot of people disagree on the inflationary effects of each president. I think that Trump would be less inflationary because he's talking about tariffs. But if you look at some research done by Tony Nash at Complete Intelligence, he showed that the tariffs in the prior Trump administration had a brief effect on prices that was quickly reversed. That's number one. Number two, when I talk about Trump on his policies, he's also deregulatory, which spikes growth, which could spike inflation. And he also wants the Fed to lower rates, which could spike inflation. But he can't do those just by the stroke of a pen, where he could do with tariffs. So I think the tariff is the only thing. Number two, I think his threats of 100% tariffs are exactly that. They're bargaining. He's negotiating, right? And he's throwing that out there to scare him. But Kamala Harris, on the other hand, just talks more government spending, which we've seen is inflationary. We've seen that. So I think she's more inflationary. But the only place you can see clear evidence of a divergence in economic ideas is in Bitcoin. Because Trump wants to bring Bitcoin into the Treasury, which he does have the purview to do. Treasury falls under the executive branch. And Bitcoin suffered a little bit. So I think the debate has affected the markets a little bit over the last 2 days. Bitcoin has tried to rally and has struggled. What do you think, Jimmy?
Okay, no, I love that. And I wasn't even thinking in terms of Bitcoin, but that makes complete sense. And maybe that was one of the reasons that Bitcoin did suffer quite a bit in the wake of the debate. Because I was looking in terms of stocks, oil, gold. So look, stocks real quick. You said Kamala Harris would be a profligate spender. I believe that 100%. I also believe that she would continually tighten the screws on a regulatory framework. She has, part of her whole thing has been like the corporate sector is robbing us blind and we need to crack down on corporate excess. Okay, great. But I do think that that will mean the Federal Reserve will keep rates lower and keep money pumping into the system, which could, from an equity standpoint, balance it, and stocks could do relatively well. Now let's put Trump in there. Trump will be a deregulatory framework and give the corporate sector what they need. We see this, by the way, in small business optimism, that they believe the same things I do. Small business optimism shoots higher when they think a Republican president is coming into office. So what that could do is unleash the corporate sector. What comes with that is inflation. So perhaps then the Fed keeps rates higher, turns the spigots down a bit, and stocks do well, but not like wildly well like they could have just because every company's doing well. So I think on balance, the stock market is equal with both of them. Now, oil market, Trump could be a drill baby drill president, which could drive the price of oil down. I know it's been driven down already, probably by China woes. But if Trump becomes president, I like selling the commodity and then maybe buying some of the names because of regulatory relief that might be coming their way. With Kamala Harris, I'd buy crude because she's going to not be drill baby drill. And probably those companies still do pretty well because they tend to correlate with the price of crude. Gold, you buy a ton of it if Kamala becomes president because she spends like a drunken sailor. You buy some of it if Trump becomes president because he spends like a mildly buzzed sailor, not totally drunken. Does anything there you like or disagree with?
Well, I want to add to something you said. I disagree with the stock market being stop. How do you say it? Say it for me.
You say stock market.
Okay. Stock market being flat. And the only reason I disagree with that is more inflation is actually positive for stocks. Stocks are an asset.
I meant the effect is washed out.
Okay. Perfect,
I'm still positive both of them. Yeah, that's not what I meant.
Then we agree on that. Bitcoin actually rallied almost 7% the day before the debate. And since then, it's up 0.55%. So it hasn't moved at all. And it's tried to rally and failed both times over the last 2 days. So that's why I think it's a good proxy. In terms of the inflation recession effect, here's not what I worry about, but if I were going to talk about a perfect scenario, really for either president, right? The 2s, 10s inversion is no longer inverted, right? We've got about 4 or 5 days now. I think it's 5 days now. We're going in a positive 2s, 10s curve. That happens before recessions historically. Okay, it goes inverted. The predictor of the inversion is built in within the uninversion or the disinversion, right? So when it disinverts, the recession is usually 6 months later. I'm not saying this one is going to be or if it's going to be at all. So if there is a recession, then inflation helps. And then the Fed can actually not cut rates in the face of inflation because they'll be talking about the second mandate of full employment. What do you think of that?
I love that for sure. And by the way, I wanted to add too that two of the people who we truly look up to and listen to, Jim Bianco and Mike Singleton of Invictus Research, both of them are in the total non-recession camp, where you and I are both leaning more toward the recession camp too.
Yep.
When I look at Powell and the comments he's made, I wonder, does he believe that the neutral rate is lower than here, or does he believe we are weeks or months away from burning timbers falling from the ceiling? And I'm not convinced of that. I think he more thinks the neutral rate is lower, but I think we're weeks or months away from timbers burning from the ceiling. You want the last word?
Yeah, I think he thinks a recession is coming. I think he believes in the Somme rule and the inversion and disinversion theory, both of which have happened. So I think he's trying to head off an inflation and actually land that plane. But I think it's probably going to crash and kill lots of people.
Okay, we're going to end on that. Yeah. Metaphorically, of course, and metaphorically eat the cats and dogs as well, because that's, I don't know, that seems like a thing these days. This is the Future's Edge Unfiltered Flash. I'm Jim Uriel. That's Bob Iacchino. Thank you guys to all the support you've given us. Please subscribe to us on YouTube. Please support our sponsor, Hardcore Italians. If you haven't been on the website, could you go to our Twitter page? We will show you where the website is. You will love it. Thank you guys. Without you guys, none of this works.